It was a quiet day on Wall Street as we saw most indices closing near their flat line. We do continue to retain a bullish intermediate posture on most indices despite a few sell-off days here in recent weeks. A lot of our news today revolved around trade. Of course, everybody's waiting for this weekend to hear if additional tariffs will be made with the United States and China. But in the meantime, there was some positive news surrounding the United States, Mexico, and Canada. In addition to that, we also heard that House Democrats are going to push forward with their impeachment talks on President Trump. So we'll take a look at all of that, see what it means for our charts, and then we're going to get into our trade application example where I'm going to explore a bearish trade idea on an internet company. With that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's December 10th, 2019. First of all, if you're new, welcome aboard. Remember to click subscribe over on YouTube, and while you're there, check out our description area where you can sign up for our email distribution list. We're also heavy users of Twitter. We would encourage you to follow us there. My handle is @BrandonVanZ, and thank you to everybody who clicks like and retweet for us on these Market Outlook related posts. Lastly, we also have a presence on Facebook. Feel free to join our group at the web address embedded in the logo in front of you. All right, with that, let's go ahead and jump into the charts. As you can see, I've got chart 4B pulled up here in front of us. This will give us a good sense of what's happening with the four major indices in the United States. We've got our S&P 500 in the upper left, Dow Jones in the upper right, NASDAQ Composite lower left, and Russell 2000 lower right. As you can see, the most recent background color on all four of these charts is green. So as I stated in the intro, we do have a bullish intermediate term posture on all four of those charts, despite having sold off the last couple of days here on the S&P 500. Now note, it wasn't a massive sell-off. We were only down 0.11% here today. So as you can see, we're very close to all-time highs as it stands on the S&P 500. And you could say the same thing for the Dow Jones and the NASDAQ as well. We've got a little bit of ways to go there with the Russell 2000. Nonetheless, we've been making good progress on the Russell 2000 here in the last few weeks. It's actually become a little bit more of a leadership group there with small caps in the United States. In fact, you can see here, Russell 2000 was the only one of these indices that was up here today. Again, not a whole lot, but hey, a win is a win. It was up 0.13%. So as it stands right now, trend continues to be bullish. Path of least resistance continues to be to the upside. From a seasonal perspective, we happen to be in a bullish time period of the year as well. Now, there are some possible near-term divergences developing from a bearish perspective, so we do want to keep our eye on that. But all else being equal, this continues to be a reasonably bullish time to be invested in the U.S. stock market. Let's go ahead and take a look at our next chart setup now, and this one is going to be our 3 green arrows setup. Now, when we're looking at this particular chart, a quick reminder that the background colors of this chart 4D are going to refer to our 3 green arrow system. Right now, the only chart on the board that has 3 green arrows is the Russell 2000. As you can see, the Russell 2000 put in its third green arrow yesterday when the stochastics gave us a phantom green arrow right there, completing the 3 green arrows, and that's why the background color of this Russell 2000 chart is green in this particular case, signifying the 3 green arrows strategy is implemented here. On the other charts, we're still waiting. In all 3 cases, we're waiting for the MACD histogram to give us our green arrow. You can see where we're at from the Dow Jones right there. You can see where we're at right there from the S&P 500 and where we're at down below here with the NASDAQ Composite. All of them got a little bit of work to do before being able to claim that green arrow on the MACD histogram. So again, that's a sign of a little bit of loss of momentum. Remember, the MACD is there to kind of calculate momentum to a degree. And right now, we're just not really seeing the same type of momentum to the upside that we were back in late October and kind of early to mid-November time period. We've stalled out a little bit. It hasn't been a major breakdown of support or anything along those lines. It's just we haven't continued to advance the way that we were earlier in the fall. So we'll keep our eye on that, but right now Russell 2000 is the only one that has the 3 green arrow signal. In terms of our longer term chart, probably not a whole lot of change here since these charts will be weekly candles, and each one of these charts goes back 3 years in length here on this chart 4C for those of you that are premium market scholars following along at home. The background colors on these charts will change from pink to green depending upon whether we have a bullish crossover or a bearish crossover using the 10-week moving average versus the 40-week moving average. And as you can see, the most recent change that you'll want to be aware of was the Russell 2000 that occurred back here in October and has continued to be bullish ever since then. The other signals have occurred on the other three charts way back at the beginning of 2019, so they are well entrenched into their bullish up modes right there. But remember, this is not a very sensitive way of looking at the market. You probably are only going to look at changes of posture from this perspective maybe a couple of times per year. So this would be more for your money maybe sitting around in your 401k or something that you don't have access to trade actively. All right, let's now go ahead and take a look at some 12 grid analysis. We'll start with chart 5A in this case. This will be our asset class 12 grid. Now, as you can see, there's a number of different colors on the background here and different shadings as well. As a reminder, when we get into these 12 grid charts, the background colors, when they're green, signify a bullish intermediate posture according to the market forecast technical indicator. If it's a dark green background, like we see up here with EFA, that means we have a strongly bullish posture. If it's a light green background, like we see with EEM, it means we have a weakly bullish posture. Same thing can be said with the pinks. Notice here on foreign bonds, that's a dark shade of pink. That's a strongly bearish posture. And then to the left of it here with TLT, that's a light pink color, so that is a weakly bearish posture there. Now, in terms of any trends that you're going to want to be aware of with these particular charts, I would say that the United States stock market continues to be reasonably strong, as does developed foreign markets up here. But we don't want to overlook what's happening with oil. Oil down below on the bottom rung here has actually started to go up at a pretty healthy clip. In fact, you'll notice the intermediate line right now is at 89.11 and rising, so well entrenched into that upper reversal zone. Remember, the intermediate line can only go as high as 100, so 89 is way up there. Anything above 80 we would consider to be strongly bullish. And so anyway, oil hasn't been talked about maybe as much as it has in the past, but nonetheless, it is shaping up fairly nicely here. And of course, that can go to help support some of those oil stocks out there as well that have largely been, in the doghouse for much of the last couple of years. So we'll see if they can kind of get their act together here, kind of coming into the end of the year. All right, moving right along here now to our next set of 12 grids. Let's take a peek at what's happening with the sectors with chart 5C. Now, these are the large cap sector views here. Remember, these are ticker symbols that represent the select sector spider ETFs that track kind of the large cap stocks from a sector perspective in the United States specifically. So there will be some slight nuances if you were to look at mid cap or small cap stocks or even foreign companies, but this gives us a good general sense of what's happening with sectors. And this is chart 5C for those of you following along at home with your own premium charting package. Now, as you can see, we've got a clean sweep here in the United States. All of our charts have a green background. Now, 3 out of our charts do have a light green background. So that would be the discretionary stocks, which is very much dominated by Amazon. Remember, Amazon is by far and away the largest component of XLY. Second place isn't even close. So in a lot of ways, XLY will look like Amazon to a degree. Right now, Amazon hasn't really been able to go up at a rapid rate. It hasn't really gone down at a rapid rate either. It's kind of just tracked sideways, and that's why it shouldn't be a big surprise that XLY has largely gone sideways here as well. That's your discretionary stocks, but that would be considered weakly bullish at this point. Energy stocks over here to the right also would be considered weakly bullish. However, we are at least above that rising moving average, so that's a start. And, like I mentioned a moment ago, at least oil prices themselves have been going up at a reasonably brisk pace here, and that should help support oil and gas stocks. So far, it hasn't really gone up at the same rate, but perhaps that'll be in the cards a little bit later on. Real estate is also one of those weekly bullish postures. This one I'm a little bit more concerned about. Real estate certainly had its day in the sun earlier in the year, but times have changed. This is more of a risk-taking market that we find ourselves in right now, and not necessarily one that is drifting towards those interest rate sensitive areas. You'll notice here that real estate is kind of riding that downward trending moving average lower. So note the difference there between most of the other charts on the board. You've got two charts in the lower right-hand corner, utilities and real estate, that have downward trending moving averages. All of the rest of the charts have upward trending moving averages. And so you can see where kind of money is rotating into from this perspective. As far as some of the strongest charts on the board, you can see here that healthcare has all of a sudden become one of the biggest. In fact, if you look at all of the intermediate values on this chart in front of you, you'll see that the intermediate line on XLV is at 93.97 and rising. That is the largest number on this board, signifying that this is the stock, or in this case the ETF, that has the most strength, at least according to the market forecast intermediate line. So with that information in tow, it shouldn't be a big surprise when I come on over here to the internet and show you on our website over at marketscholars.com the sector selector infographic that I put together as of Friday night. So as you can see, we had one major change week over week. Healthcare has now become the #1 sector out there for the first time in over 3 months. Remember, this graphic here is a rolling 3-month basis. And so as you can track your eyes backwards with this thick green line, you can see we've never been even close to #1. And so this is the first time in over 3 months that healthcare sits atop all of our rankings there. So there's been a lot of different areas, and we've been talking about healthcare exclusively the last 2 weeks in my top-down trend trading classes that I present on Monday mornings for those of you that are premium members. So we generally review 3 new trend trading setups and look at them from a top-down analysis perspective. And our 3 stocks that were reviewed this past Monday were all healthcare, and the week before, the prior Monday, the same case. All 3 of those were healthcare related as well. So that's certainly an area we've been diving into in my premium classes over here at Market Scholars. And areas like healthcare equipment have been very strong. Also, areas like biotech have been very strong. Now, in going into the #1 slot, that means that the old #1 had to take a back seat, and in this case that means that industrials fell 1 slot to the #2 slot right there. So we still have healthcare, industrials, financials #1, 2, and 3. It's just a slightly different order this week, with healthcare sitting up there at the top. Also, while I'm over here on the internet, a quick thank you to those of you that clicked like for me the last time around when I did this market outlook video. I guess that would have been last Wednesday. 103 of you clicked like, so you took the 5 seconds out of your day to say thank you to both David and I when you do that on a regular basis in order to encourage us to produce these videos as often as we can here on YouTube. So if you want to see these videos continued, get in the habit of clicking like for us there on Twitter, or just do it right here on our website while you're watching the video. We make it nice and easy for you there. Also, earlier today, I taught my dividend growth investing class where we talked about consumer discretionary stocks. That is now posted to our Trading Rooms calendar, so feel free to go check out that recording if you're a premium member. And tomorrow I'll be teaching my factor-based swing trading class at 11 a.m. Eastern Time if you want to join me live for that. We actually booked 2 more wins in the last week, which brings our win-loss percentage to 71%. Win rate here in 2019 in that particular swing trading class. We'll see if we can keep our hot streak going tomorrow. Feel free to join us for that. And then David will be teaching his options inventory trading class at 2 p.m. Eastern tomorrow afternoon. So lots of good stuff coming your way, as always, here at Market Scholars. All right, let's get back on track with some of our charts and advance to our next set of 12 grids. In this case, we're going to go on over here to the global stocks. This will be chart 5E. And as you can see, we've only got 2 pink charts on the board. India here in the middle, and then we also have South Korea in the lower right. South Korea is one that I brought up last week, as well as looking somewhat unhealthy from a momentum perspective. In fact, as you look at all 12 of these charts, you can see that there are only 2 charts on the board that have a red moving average right now. South Korea is one of them right here, but then China is the other one. Now China, you'll see here, does have a weekly bullish posture because the intermediate line is at 23 and rising. Remember, if that were below 20, that would be considered bearish. So it's just barely above kind of that level where we would consider a strongly bearish posture. So China had a little bit of a pop here in the last week or so, but it remains below that falling moving average. So at this point, I don't know how much I trust it. Now, obviously, China is very much in the headline news, and so if a deal gets inked this weekend and market participants are enthusiastic about it come Monday morning, there's at least a reason, a catalyst out there where China can go higher. But equally as important is the recognition that if a deal does not get done, it's possible that China will use that downward trending moving average to push lower, kind of use that as a resistance area and push lower, and we might end up looking at China with a bearish posture here sooner rather than later. But right now, I would say South Korea is even a bit more concerning than China, although both of them are struggling to a degree. And I forgot to point out Germany here. That I overlooked that. Germany in the upper right also has that light shade of pink, so it's not a deep shade of pink like India and South Korea, but it does have that light shade of pink there, telling us that we do have a weekly bearish posture there. But that one you can see is really just kind of tracking sideways, so I'm not quite as concerned about Germany at this point until I see further deterioration. So we'll keep our eye on that, and of course alert you to anything important from that perspective. In terms of the bullish charts out there, no, there's not a lot of bullishness, but I guess I would say that Japan probably looks like it continues to be in that uptrend, as we've been pointing out here in these videos for months at this point. But it continues to be riding that moving average higher. Let's look at the secondary 12 grids now, and this will be chart 5G. These will be some of the smaller economies out there. And as you can see, there's only one pink chart on the board on this particular set of 12 grids, and that's Turkey right here in the middle. However, Turkey is trading above a rising moving average, so perhaps just needs a little bit of time to gain a little bit of traction there. I'm not as concerned about Turkey at this point as I would be with South Korea and China. In terms of some of the better looking charts, you can see that there are a couple of decent trending charts out there. In fact, I would say Switzerland right here is kind of catching my eye there with a series of higher highs and higher lows. But also you'll want to note down below here, and I talked about this a couple of weeks ago, Argentina had a nice breakout right around this level and has continued to show advancement there. So remember, Argentina was the country that had one of the biggest one-day falls in the history of an entire country index here earlier in 2019. And so there is some possible room to the upside. This chart right here that you're looking at only goes back 3 months. But if I came in here and went to studies, and let's look at settings and go to time frames right there. And let's go back on a 1-year chart instead and add that. For some reason, that's not coming up for me. Hang on just a second. This is the easier way to do it. I should have done it this way in the first place. There we go. There's our 1-year chart. And let me right-click and maximize this cell to kind of give you a sense of what happened to Argentina. This is what I was referring to. This was a massive gap down in Argentina back here. It would have been back in August. And then we spent several months just trying to find a bottom. Well, this has been really constructive price action over here on the right-hand side to the point where you could actually make the claim that you've made a series of higher highs and higher lows here in the last, let's call it, month and a half. So there is upside room in Argentina if you believe that this trend will continue. And you can see that that moving average is now curled higher and is painted green at this point as well. So kind of interesting here with Argentina after it had kind of been left for dead earlier in the year. All right, so with that 12 grid analysis out of the way, let's get into our trade application example here for today. And for this, I want to come on over here to chart, let's just do 3A. This will be one of the swing trading charts that we use, where we use the near-term line a bit more than the intermediate line. And I want to take a look at ticker symbol BKNG. This is booking.com. And this is an internet company. It's basically Priceline and Booking and a few other. They have some partnerships around the world as well. But think of them as an online travel agency type of an internet company. And as you can see here, this company has struggled to a degree. You can see that the moving average, in this case the 30-day moving average, is traveling lower and is painted red. You can see that the S&P 500 dotted gold line up above here has vastly outperformed Booking Holdings, especially here in just the last month and a half or so. You can see that after a little bit of a reflex move off of the bottom when it touched 1826, it came up here to that downtrending moving average, and it appears to my eye like it's using it as a resistance area where it appears like it wants to bounce lower yet again. You can kind of see a little bit of divergence here as well, as you saw kind of some peaks over here in the blue near-term line, followed up by this peak over here that was just a little bit outside of the upper reversal zone. Meanwhile, price was going up during that time period. So maybe a heads up that some of our underlying indicators are suggesting that this stock is weaker than what meets the eye here. So when we have a bounce down setup like this, one possibility of taking advantage of it would be to just short the stock outright. You're certainly welcome to do that if you have a margin account. But another way to think about this would be to look at selling a bear call spread. In that sort of a situation, you do have the benefit of having a defined risk trade as well. Some people are a little bit nervous shorting stocks knowing that there is unlimited risk potential in doing so. But when you're setting up a bear call spread to kind of establish your bearishness in a particular stock, you know going into the trade what your worst case scenario is. So let's go ahead and practice that philosophy here today with the bear call spread. I'm going to come on over here to the trade tab. I've already selected my strikes down below here, and you can see what I've done is I've selected the January monthly contracts with 38 days left until expiration. The strike that I'm selling, the -1 that you see right here, is the 1990 strike. So that's $1,990. Yes, this is an expensive price stock. That's the one we're selling. That's the call we're selling. The 1990 call is what we're selling. What we're buying, or our +1 over here, so we're just doing one contract here for educational purposes only in paper money. So the strike that we're buying is the 1995 strike, $1,995 strike. And that's a call as well. So when we combine those two things together where we're selling one call and we're buying another call that is a higher strike price than it, it creates a credit. As you can see over here, our credit is $1.20. So we have a $5 wide spread between 1990 and 1995, and we're receiving $1.20 in credit up front for being willing to place this trade. What we generally shoot for is a 30% return on risk when we're selling these credit spreads. Now, in order for you to check that on your own, one quick way to do it is simply click confirm and send here on your Paper Money Thinkorswim platform one time. That then brings up our max profit and our max loss where we can get our calculator out. And in this case, we're going to take $120, which is our max profit, divided by $380, which is our max loss. And you can see here that our return on risk is 31.5. So this is up and over that hurdle. You can also see while we're over here what our break-even price is for this trade. So $1,991.20 would be our break-even. Now, for those of you that are newer to this type of a trade, what we're trying to say here with this trade is we want this stock to go lower. If it doesn't and just goes sideways instead, that's fine as well. But what we don't want to have happen is for the stock to go up above $1,991.20. Now you can see currently Booking Holdings is trading at about $1,904. So in other words, we've got about $85 per share of wiggle room here in the next 38 days. And as long as we're not dramatically wrong with this idea here of bearishness, then we should be able to make money on this trade. To give you an idea of where 1991 is on the chart, let's go back on over here real quick, and I'll show you that 1991 is about right here where I'm circling with my mouse. And you can see that if the stock were to get way up there, it would have to breach this gap down trading candle right back here after its most recent earnings announcement. So if you believe that this gap will effectively hold going forward and we won't fill that gap up to this candle, then this is a bearish trade that would allow you to make money off of that particular philosophy. So let's go back on over here, click confirm and send, click send, and we'll see if we can get filled on that first thing in the morning. All right, thank you for joining me here yet again. A quiet day in the stock market as we're all kind of waiting for this weekend to see what happens with the United States and China. But in the meantime, we do continue to have a bullish posture, not only on the S&P 500, but most of the sectors within the market as well. So that's a positive sign. But of course, there are still opportunities for bearish trades out there, as I showed you here in our trade application example. So if you got value out of tonight's video, make sure you come on over to Twitter, click like for me, and then I'll be back with you tomorrow as well. Until then, I want to wish you all the best of success with your trades and your investments. Goodbye for now.